You had a vision of serving your community by starting a culinary art school for youth, or by providing toiletry items to the unsheltered community, or even teaching computer coding to the elderly. And you did everything to get your nonprofit started, up, and running. And you have one person who is 100% on board with your mission, and they are fully committed to your cause. So much so that they want to donate $100,000, which would totally fund you, at least for the first 2 years. But little did you know, that large donation could put your organization at risk with the IRS and place you in jeopardy of failing the public support test. If you watch the rest of the video, I'll explain it to you.
Feel my faith rising. I'm crawling out the trenches, holding me. My life.
Hello, visionaries. Welcome back to my channel. My name is Marisa Talbert. I'm the founder and CEO of Talbert Law Office, your favorite go-to legal resource for all things business, nonprofit, and intellectual property law. And while you're at it, go ahead and subscribe, click the notification bell, and give this video a thumbs up because you already know you're going to learn something new today. If you're in the nonprofit space, you will understand the language of a 501c3, which is known to the public as a charitable nonprofit organization. If you remember in my last video, I mentioned that there are more than 20 types of nonprofit organizations, but there are two primary types of charitable organizations. These are the types of organizations that generally allow donors to claim the tax deduction for the contributions made to this type of organization. These two primary types are known as a public charity and a private foundation. Examples of a public charity include the Salvation Army, Boys and Girls Club, Habitat for Humanity, and many of your local nonprofit organizations that are just serving the community in various capacities. On the other hand, there are private foundations, which are most often founded by certain families, such as the Bill and Melinda Gates Foundation. For the purpose of this video, we will be discussing public charities only. So let's jump right into it. Once your organization is approved by the IRS to be a tax-exempt entity, you will receive what's called a determination letter, which will show your public charity status. This public charity status determines whether you are a public charity or some other type of tax-exempt entity. As a public charity, you have 5 years to prove yourself. After the 5th year of operation, the IRS will conduct a test known as the public support test. This test is to ensure that your organization is actually being funded and supported by the public, and not by a single or a few big dollar donors. So first you might ask, why does it even matter? Well, a public nonprofit organization has no owner. It belongs to the public. And we all know that the one who controls the money holds all the power. So the IRS wants to ensure that no single person or group of persons can just pour money into a nonprofit organization to control its interest, or that people are not able to use a nonprofit organization as a shield for some improper, unethical, criminalistic, shady behavior. So let's break down this test. As anything dealing with the IRS, there are several subcategories of organizations that fall under the 501c3 specifically. But for the sake of simplicity, we're going to talk about the two primary ways to calculate this public support test. The first type of calculation that we will discuss requires that at least 1/3, or 33.3%, of all donations come from the general public. This includes government grants, membership fees, and any other contributions directly or indirectly made by the public. The public does not include a single person or a non-governmental entity that gives more than 2% of your total support over a 5-year period. I'll break that down later. The second type of calculation provides that if you did not hit that magic number, that 33.3% or 1/3 of public support, you still may be able to qualify as a public charity through facts and circumstances that show that you normally receive a substantial amount of your support from the general public. Now, I know I just threw a lot of numbers and percentages at you, so let's take a look through an example. ABC Charity is a public charity that receives substantially all of its support from individuals, families, and businesses. Let's assume that the organization raised $1 million within the past 5 years. So we need to flag any single donors who give over that 2% threshold. And 1/3 of $1 million is $333,000. So if ABC Charity raised $1 million within a 5-year period, $333,000 of those dollars have to come from the general public. And that cannot include any single person who's given over $20,000. Does that make sense? I want to make clear that the public support test is first calculated after a nonprofit organization's first 5 years. So that first calculation is based on a cumulative 5-year period. However, after that 5-year mark, the public support test is calculated each year thereafter. So let's change up our scenario a little bit. In its 6th year of operations, ABC Charity received a total of $150,000 in donations for the year. It included a donation from a corporation of $75,000 and a special donation from an individual for $30,000. Let's see how the numbers break out. You have total donor support, $150,000. You have total support under the 2% threshold. 2% of $150,000 is $4,000. So we have only $45,000 that were brought in from the general public. And then we have these two large donations. One of $75,000 and another of $30,000 from two donors for a total of $105,000. Therefore, the public support percentage is only 30%, which would cause ABC Charity to fail the public support test for year 6. This is known as tipping. So let's talk about what happens when a public charity is tipped to the point where they fail the public support test. Tipping occurs when a single donor or a small group of donors makes such a large contribution that it tips the public charity into a space where they fail the public support test. The IRS will not penalize you the first year. They will notify you that you no longer qualify as a public charity, and then you will have the opportunity to fix that. But once you fail the public support test for 2 consecutive years, the IRS will reclassify you as a private foundation. A private foundation is still considered a 501c3 nonprofit organization. It is subject to the more stringent IRS regulations that govern private foundations. It is also subject to certain taxes, minimum distribution requirements, and a very long and time-consuming annual tax filing each year. Just to recap, the IRS will monitor the source of your funding for your nonprofit organization. And what's that magic number? That's right. 1/3 or 33.3% of all of your contributions must come from public sources. You have a 5-year grace period. I got 5 on it. After which the IRS will cumulatively calculate your public support using the public support test. After the first 5 years, meeting that public support threshold is an annual requirement. If you fail to meet the public support test, your organization will be reclassified as a private foundation, which subjects it to special taxes, new requirements, and a really long and cumbersome annual tax filing. Also, Be aware that there are certain reporting requirements for both public charities and private foundations for any donor who gives more than 2% of your total revenue within the organization's fiscal year. If you are a founder, board member, executive director, or leader in a nonprofit organization, I recommend that you seek legal advice to ensure that your organization is maintaining federal and state compliance, because there are so many regulations around nonprofit organizations. And remember, attorneys help to prevent issues, so talk to an attorney before you start implementing programs to make sure that they are legally sound. All right, well, that's all I have for today. I hope this was helpful, and next week we'll continue to get into the nitty-gritty around nonprofit law. Don't forget to like, comment, subscribe, and share with a friend. Until next time, this is Talbert Law Office, your favorite go-to legal resource for all things business, nonprofit, and intellectual property law. I'll see you in the next video.